Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a beautiful long weekend, and hopefully you had a very good first day of trading today. And in today's markets, guys, well, as you can see, the SPY and the QQQ really rallying hard, finding a very nice support level. And of course, the cause for the rally was a delay in the tariffs that were proposed on the Friday session in terms of 50% on the European Union after trade negotiations were moving slowly and stalling. Those over the course of the weekend were now delayed until July the 9th, with a very good phone call being made between President Trump and Ursula von der Leyen. Here's what Trump had to say. We had a very nice call and I agreed to move it, Trump said over the weekend. She said, we will rapidly get together and see if we can work something out. Von der Leyen herself said in a post on X that she had a good call with Trump and that the EU was ready to move quickly. Europe is ready to advance talks swiftly and decisively, but to reach a good deal, we would need the time until July the 9th. And as a result, Trump providing that time, this time until July the 9th. And of course, the market's rallying very hard off of that news today, and seems as though after a few short days of consolidation, we have now found our daily higher lows and might just be looking for another leg of expansion into some resistance highs. So in today's video, guys, we're going to go through a few things together. Number one, we're going to be recapping the technical analysis on all of our major market indexes, see how the rotation is shaping out. Number two, go through our list of major big tech names. Are there still some big tech names good for some swing trades, for some long-term positions? We'll go over that in the second part of the video. And lastly, I'll take you through a few of the trades that we made today in the Discord together, and also some of the trades that I'm keeping over the course of the week. It was a very good week for last week as well. I'll show you guys the total recaps from last Friday and also get into the trades for this week. So it should be a very fun and relatively short video. Tomorrow, going to be a bit longer though, because we have to prep for NVIDIA, Salesforce, and Elf Beauty earnings, which should all be quite notable for the markets. But today should be a shorter than usual video, so let's jump right into it, shall we? So the SPY up a nice 2.08%, the Q's up 2.35%, and as you can see, very green all across the board, no major sectors getting left behind. That being said, the heat map is looking very beautiful. As I said, no major sectors getting left behind, but the market's really rallying hard off the back of some of the big tech names carrying the market forward, but everything performing pretty well today. On the one-day relative, you can see that even better to where tech was outperforming the bunch, but everything decently in the green. On the 1 week relative, we know that we were in a phase of daily and weekly consolidation in the markets as well. So after 5-6 red days pretty much, or down swings across the board, we now have a few names, or a few indexes rather, that are still positive. Communication services and basic materials are two of those. Everything else still a little bit to the downside, as we have not recaptured some of the highs that we saw just about a week ago. So in terms of the market recap and the rotation does look healthy. Some sectors are looking better than others, and some sectors are slightly lagging behind. I'm looking at you, healthcare. So now that that's out of the way, guys, let us get into the technical analysis right away and just dive into the charts, right? So the SPY up a nice 2.08%. We know that very clearly. We're looking always for a new daily higher low, and seems as though that has been provided now with the news of the tariff relief. So it was always a daily uptrend that was never in jeopardy. We now have support below us still around 585 to 575 on the SPY, and we also have overhead resistance 610 roughly, down to roughly 600 is the next level, which is synonymous with your all-time highs overall. Not looking bad, but I'll remind you, the biggest catalyst for the week probably is going to be the NVIDIA earnings tomorrow after the close. In terms of our macro outlook that could affect the SPY, well, there's not really too much tomorrow. We got the FOMC minutes. Then on Thursday, the biggest day is going to be a revision of the Q1 GDP print that we just got last month. This one gets revised every single month throughout the quarter. There shouldn't be any major surprises, but still something to look out for. And on the Friday session, we once again have core PCE, another read into inflation where we get the month over month and year over year. So we will see if the inflation read is still moving in the right direction, and if it gives us any indication as to the Federal Reserve's speed on the moves for the next rate cuts overall. But overall, the SPY is looking quite good in terms of market breadth. We can take a look at the breadth overall. The breadth percentage of stocks above their 20-day EMAs after a few days of consolidation, where we were saying it was running a little bit hot, it went down to a more manageable 50% range, and now back up to 64 at the top end of the range. But I wouldn't say we're necessarily overbought in these conditions after 1 day of rally. Percentage of stocks above their 50-day EMA, also those are clipping into some of the historical highs. This chart goes back all the way back to 2002, and you can see that when we come up into this area, the market is running hotter than normal. But right now, I wouldn't say we're running into any overbought indicators just yet. And percentage of stocks above their 200-day EMA, still a lot of room to move. Just goes to show how much of a chunk of this market came down after those tariffs, after Liberation Day earlier in April, right? Percentage of stocks above their 200 still sitting at around 42%. So the breadth indicators are looking pretty good, and the fear and greed index is sitting at a cool 65. Not at extreme greed, but the market is still feeling a bit of greed as people pile in to the markets after some FOMO, after possibly feeling that they've been left out over the last few weeks of trade overall. So in terms of the SPY, weekly uptrend is now maintained. The weekly higher lows are probably found at this point since we have now established a new very decent level overall. So we'll be looking for the possible follow through. However, if we do not crack new highs, guys, right, and we just move a bit lower, we're still going to be looking for a weekly higher low, right? Anything at that point above 508, looking for a weekly higher low. And the best area, in my opinion, for any pullback would be a gap fill and a revisit of the 565 down to 551. Not too sure if we're going to get it, and we can't confirm that this weekly higher low is set until we get the new leg of daily upswing in motion, because this can very easily be unwound and move into a daily downtrend. That will all be news dependent, in my humble opinion. But as of right now, looking pretty good overall in the markets. Moving on to the Qs up 2.35% overall, looking pretty good too, right? Daily upswing and still in motion right now, reacting beautifully from our support zone. And of course, the macro headline news that definitely helped. 510 down to 501. Now, we were always looking for dip buys all across the board, right? It was just a question of how far would we pull back. And I was clearly stating that, in terms of the weekly charts, all of these weekly pullbacks were for incremental buys and for lining up some swing trades as well. Very nice weekly push here on the Qs, currently running into resistance very shortly here at about 520 up to about 535. That's going to be our all-time high range of resistance as well. Big tech has done a phenomenal job of lifting the market on its backs, but some of the big tech names have not hit their own respective all-time highs. Matter of fact, some of which are still lagging behind, such as Apple, such as Meta a little bit, and especially such as Google too, right? Some other names such as Microsoft, Netflix, and others continuously hit new all-time highs. But I wouldn't say that big tech have been the best in their best form in terms of rallying recently, right? At least not all across the board. Moving on to financials right now, 1.76% to the upside, not looking too bad there. I'll remind you, financials was a little bit different because we did lose the daily uptrend pattern, right? We flushed the higher lows right there, creating a new low. That was not a daily downtrend. For that, you would need a lower high into lower low. Now, that's still on the table as we mount into the resistance range 5150 down to about 50.75. So in the event we unravel, same analysis as last week, guys, we're still going to be looking for a weekly higher low in the bulls with tons of space, anything above 45, looking for those weekly higher lows. Pay attention to the banks. If the banks come down a little bit more and they start filling some of the gaps, if you can find, the Bank of America's of the world, the JP Morgans on some of a bigger pullback here into prior levels, those could offer up some swing trades. The one that I'm personally taking myself is Berkshire. I think this one has a pretty nice chart here, finding a bottom of support in around the 500 to around the 505 range, looking nice for some possible expansion, and that's why I drew a pretty little arrow on this chart, looking pretty good if you ask me. Right, kind of looks like a weekly bull flag right now, possibly looking for expansion. So that's the one in the financial sector that I took myself, but feel free to do your research into some names that may have similar setups. Moving on to healthcare right now, up 1.4%, not too bad at all. Healthcare has been the sector that has just been lagging behind. Daily downtrends all day. The lower high, the higher low right now. Can they possibly get it done and go for the trend change? Well, we will see, but they are currently finding a nice base of support, the same as they have been finding since the tariff fear lows, and it makes a lot of sense, right? These guys are going to be very tough to get through to the downside. That is all your support from prior in 2021 all the way through the end of 2023. So almost 2 years of resistance. And anytime we trade below the 200 weekly EMA on this healthcare chart, that's that green line right there. You can see that normally it has been a good buying proposition for the entire sector. And I'll remind you as well, I priced out some leaps for everybody on the channel in the last 2 weeks. I will personally be going probably for the 130 leap January 2027, as instead of playing some of the oversold individual names such as Merck, such as UNH, and many others that are just completely lagging behind the markets right now, I would rather just play the index ETF overall, as it does provide a bit of diversification rather than trying to pick one individual healthcare name, because there's a lot of them currently on the table for some buys, of course. Moving into SMH right now, SMH 3.17%. to the upside. They have NVIDIA earnings tomorrow. So that's going to be the biggest catalyst, guys. NVIDIA expected move is about 6-7% in the after hours. So that will definitely move this chart one way or another. If we do a nice job on those NVIDIA earnings, we'll be moving into the resistance range, which currently stays put 250 up to 260 at this point in time. But if they're bad and we flush the lows of Friday, it'll be a daily downtrend into support. Got a lot of support down below here, 232 down to 211 roughly. And at that point, guys, we'll still just be looking for a weekly higher low, right? At this point, anything, right, is going to be just a pullback for possible entries and buys and swing trade longs. Anything above 185 on that weekly time frame, looking for a weekly higher low for possible further trend continuation. So looking very good on semiconductors, all things considered, guys. Nothing bad to say, but as I said, the NVIDIA event will be the biggest market mover for this sector all week. Moving on to the Russell right now, 2.54% to the upside. Growth stocks not looking too bad. This was one chart in terms of the indexes that did hit a daily downtrend with the low, the lower high, well, the equal high and the lower low pattern set in motion. They have now since filled this beautiful gap right here at the $200 level, bouncing out of support 200 down to 187 and now approaching resistance. Maybe third time's a charm to try and get through it, right? This resistance range 208 up to 217 overall. It is a big level for the bulls to get through. I'll remind you, it is a very big prior support and possible resistance zone, and now it will be acting as resistance again. But the weekly bulls are not looking too bad, guys, right? Not looking too bad. Trying to find the weekly higher lows, trying to go for the expansion, but in the event we unravel again, we'll still just be looking for a weekly higher low, and at that point, anything above 180, going to be looking for the weekly higher lows for possible trend continuation. So we will see in which direction the bulls or the bears pull this market. Any pullbacks, further pullbacks into support areas across most of all your major indexes, in my opinion, are still very decent buying opportunities. There's always some names that are lagging behind the markets right now, so keep that in mind. No need to chase everything to the upside. Just wait for the market to come to you on some of your favorite names and stay patient, especially if you're trading. If you have a long-term portfolio, the recipe has always been very simple, guys. All you got to do, 10-15% of every single paycheck should be invested for your long-term self in your favorite companies, high-quality companies, and your favorite ETFs. Don't worry so much about the price. Just follow a long-form DCA process, and you should make it out just fine. Moving on to the VIX right now. The VIX down about 8%. Nothing big to report on the VIX, so we'll kind of just skip over this one. I kind of pay more attention if we come into the $23 to $30 range, or if we come down here to about 14 to 12. Come too low on the VIX, there might be a catalyst just around the corner, which, you know, might send you for a little bit of a curveball. And obviously, if you pull up higher into the VIX here, it means that probably there's a very good buying opportunity in the markets overall. Moving on to the dollar hasn't really moved, but I'll remind you what we're looking for here. Big resistance, right? 102.5 down to about 100.8 is the big resistance range. Will we flush on the dollar? Not sure. That's why I have this question mark on the chart right now. The bulls are playing a good job of doing some defense down here, and 98 is the lows. Can they get a new weekly uptrend in motion? We don't know. All we know that is the dollar has been notoriously weak as of recently. If we get more trade deals, if yields start coming down as well, that could alleviate pressure on the dollar, or vice versa. Some people say the dollar moves the yield. Some people say the yields move the dollar. Whichever the case, guys, just follow the chart. And as of right now, the bears still maintain control until the bulls take out this guy right here at around 102. Speaking about those yields actually were moving slightly lower on the day today. What you're seeing now is the after hours move, but over the course of the day on Tuesday rather, right? They did move a little bit lower, so not looking too bad there on the yields. So what we're still looking for here, guys, is the reaction zone. The reaction zone on the 10-year has always been the 4.5% range. You can see that very clearly. If I just draw a line right here at 4.5, let me just plot one right down right about there. You can see that every time we kind of break and peek our heads above, something happens, some good news kind of comes out, or Trump's language gets more favorable on the tariffs, or the Fed starts coming out with some good narratives as well, and we tend to get kicked down lower. In the same thing on the 20-year yield, I could put a line right here. It's about the 5% range, right? It's the range that you really don't want to see us break above at that current stage. It's a fight between the bulls and the bears right now, so nothing to report. We are in weekly uptrends on the yields, so we will see if those, well, that's the wrong tool. We will see if those weekly uptrends are to be maintained, and if yields go to the absolute moon, or if we get a bit more a retracement here down on the yields. One thing's for sure, in this opportunity where we don't really know in terms of predictions where the yields can go, it's in terms of absolute terms. Are 20-year bonds a decent buy here in terms of history? Yes, we can absolutely say that. We are now down into the October 2023 lows on the TLTs, I still think it's a fantastic opportunity to be adding some bonds if that is a style of trade that you would like, but you have to be very patient for that trade overall, as I've been saying many times on the channel so far. Moving into gold right now, so we can see gold, there's a constant battle, guys. You can see it best on the weekly, right? This is literally 6 weeks on gold of doing absolutely nothing. Now we can break it down into the smaller term time frames to make a bit of sense out of this, right? What the bulls are trying to do right now is we're trying to form a new base, a new higher low, and trying to manifest into a new upswing and new uptrend. But that has not been set just yet. You would need to take out 3362 to the upside. You can possibly find some potential swing trade longs in around this area right here with a breakdown below, 3275 being an invalidation point. But if you're looking for the swing trade long on gold, it might just be there, but the take profit targets have to be pretty much the all-time high areas, 3430, 3450 overall, looking pretty good for that style of move, but it is still very choppy, and you can see that best, as I said, from the weekly time frame. You can argue as well that this is just a massive bull flag, even though it was a weekly downtrend that the bulls are now trying to slowly reverse. Overall, it does look like a gigantic bull flag here, just curling slowly into the 12 EMA. Might just be looking for another leg of expansion. So we'll stay posted. No swing trade positions on me for gold right now overall. And lastly, moving into Bitcoin. Bitcoin actually had a fairly decent weekend, right? Not much action to the downside, but we did have some movement to the upside overall. And most of that was done on Sunday when we pushed up 1%. Friday was the big drop. Saturday, bit of recovery into Sunday, into Monday, and then Tuesday today was kind of a non-factor for Bitcoin overall. I'll remind you who's in control. It is very clearly the bulls, right? Beautiful daily uptrend. Higher lows are set. They're trying to go for the expansion, but keep in mind, right? If you crack these lows 106.7, we're probably going to be heading a little bit lower daily downtrend. And at that point, you'll be looking to revisit the area that we just broke out of, 105 down to about 101. And that is one of my favorite trading styles, guys. The breakout, the retest, and possibly the run could offer up some very juicy trade opportunities, but Bitcoin right now is looking good on the higher time frames, such as the monthly for further expansion, and on the weekly as well. We've had some very nice weekly MACD crosses across the board here on a lot of assets, but Bitcoin as well. And at that point, you just be looking for a slowing down of this chart into those prior highs and looking for a swing trade long on Bitcoin. Everything not looking too bad at all. That's the entire market rundown for you guys. Hopefully you enjoyed that. Now let's dive directly into some of our big tech names, shall we? All right, so first off, let's take a look at Apple. Apple up 2.53% after having a very bad day on the Friday session, 3% to the downside, now putting in a bit of a rally to the upside here, but we're just stuck right now in a range between support, which is 196 down to about 187, and resistance, which is 210 up to 222. The bulls doing a good job of saving this double bottom, but I cannot say that they really have a nice trend in their control right now, simply just range bound at this point. So at this point, I do still like writing short puts on Apple below here overall. No swing trade longs from me just because the chart is somewhat trendless, but if you are looking for a swing trade long right now, playing it from level to level, well, the stop loss would have to go below this low right here, 193, and you just be targeting expansion up here into 212 at the resistance highs overall. Apple at the end of the day is Apple, but we know that they haven't been the pioneers in terms of innovation for a while at this current stage. The iPhone refresh cycle is somewhat underwhelming, and the revenue growth is somewhat stagnant as well. So that gives them a very, very high valuation. Not my favorite company to be adding to a long-term portfolio right now, but it is one that I do still hold. Not a very large position for me, but I do still have my Apple shares. Moving on to AMD, up about almost 4% today too. They will be beholden to NVIDIA's earnings tomorrow. They'll either be lifted higher or dropped a little bit lower. That being said, daily downtrend was in motion by AMD right now. How do you know the daily downtrends are finished, guys? I go through this a lot, but essentially it is a recapture of your hourly time frames. When you have the hourly time frames back, you know the daily downswing and daily downtrend is potentially over, and you're looking for the bulls to reclaim a little bit of that. The clearest time frame for me is going to be the weeklies, right? We know that we've been waiting for weekly higher lows across all of these charts overall, looking like a nice bottoming out process. There is still a gap to be filled down here at 103. We'll see if the bulls come down there. It'll be a byproduct of NVIDIA earnings, in my humble opinion. Any swing trade longs that we're possibly taking should have a stop loss below the lows of Friday and targeting the expansion right here, 120 up up to 132 into the resistance range, playing very nice defense into support. And for the long-term portfolio, AMD, still a very cheap one, guys. Still a very cheap one overall, all things considered. Even though we're not close to the bottoms, it doesn't matter. Objectively speaking, AMD is still, in my opinion, very fairly valued for the growth that's going to be coming to them in the next 2 years. Moving on to Amazon right now. Amazon having a very nice day as well. And if you watched my top 5 options play yesterday, you would have known that there was a swing trade available early on this morning for Amazon into the expected move, which is what we did in the Discord together. We made a very nice swing trade today on Amazon. And so far, everything is playing out pretty well. That being said, we were in a daily downtrending cycle. Right now, the bulls are trying to push, and that was viewed by a recapture of your hourly time frames. That's how you know potentially that the daily downswing is finished, and you might just be looking for some upside reversals here. Swing trade longs, very simple. Stop loss goes below the 197.39 at this point, and expansion into resistance highs 228 up to 217 overall. That is synonymous with the bulls being in absolute full control of this weekly. We were always looking for a weekly higher low. Didn't quite pull down into my desired target range of the gap fill, but that's fine. We play the charts as they come. We don't try to predict. We just try to react as to what the price action is telling us. And so far, so good, with a weekly cross of the MACD as well, looking pretty good for some expansion. And right now, in around the 205, Amazon pretty fairly valued as well for a long-term portfolio addition. Moving on to Google right now. Google also benefiting from today's market rally, 2.6% to the upside on its own. And Google has a very clear chart, in my humble opinion. Beautiful daily uptrend right now. Daily higher lows are now set at the lows of Friday overall. We are now finally starting to peak above and close above this resistance range. 170 down to 161 is the area that we struggled to break out of at this point. Swing trade longs, guys, very simple. The stop loss below that 169 higher low. And you're currently targeting several levels of expansion. The next one up to about the 186. So decent risk to reward on this Google trade if you are keeping a tight stop loss. The bulls look like they want to control the daily time frames, and look at this weekly MACD as well, looking like they might want a little bit more upside in terms of momentum. Google has been one that's been left behind in terms of the pack of the Mag 7 right now. Weekly uptrends are very nice, and we are finally getting one of my favorite trades here, guys. The breakout, the retest of a very big level range here, and maybe looking for some upside. And now also Google benefiting from some pretty good fundamentals overall. I know I haven't done this valuation since about 153. I'll get that updated for you guys tomorrow, but all you need to know is we're still trading under a 20 forward price to earnings, still around a 1.2 peg, and right now probably somewhere around a 3.5% free cash flow yield with good fundamentals overall, tremendous amount of buybacks, and very good net margins too. Moving on to Meta right now. Meta 2.43% to the upside. This is another chart that possibly looks primed for some upside here. Daily downtrend, looking for the bull break to the upside, not looking too bad. We were, contemplating or, anticipating if we got a gap fill down here, that would be the best trade location for some heavier swing trade longs, but can't complain. Meta is looking pretty good right now. The weekly is still in a beautiful uptrend. If for some which reason all of these charts and even Meta continues breaking down with just a rekindling of the daily downtrend, you guys know the drill. Everything I've been talking about for the last 2 weeks, right? Looking for a weekly higher low for further expansion. Look at the weekly MACD cross. That should give you a good indication that most of all dips are for buying, especially on the longer term time frames. That support area low is 596 down to about 558. And Meta right now with some very good fundamentals overall. Valuation on a forward basis, a 25 price to earnings, not that expensive, and a fairly decent free cash flow yield as well for this growth company. Onto Microsoft right now. Microsoft another 2.33% to the upside right now. So Microsoft was in a very clear daily uptrend overall. We were noticing that they wanted to pull back into the 12 EMA, looking for a daily higher low. I would have anticipated if the news would have kept being a bit more negative, we would have had a bit more rollover as the daily MACD was showing signs of being slightly weak and the RSI was coming out of overbought conditions. So you could have anticipated more than 1 day of downside, but Microsoft bulls just buying every single dip in sight right now. So I'll remind you, still in a daily uptrend. Any move lower looking for a higher low, possibly for a further uptrend continuation. That's if they don't just blast off right away through the roof. And the new resistance range is still the all-time highs at around 467. This weekly time frame, I will admit, is very extended right now. It's kind of pulling a Netflix. The closest support range for Microsoft is still 435 down to 425. Some people can make the argument that these, some of the resistance highs are a support range. Not really, right? The price didn't trade much into those areas, only a few days of data, but I assume that if you wanted to use that range for a shorter term swing, that would be the level, and it is synonymous with the 12 EMA confluence, right? Microsoft with some fantastic fundamentals, very keen on keeping this one in my long term. Moving on to Netflix right now. So Netflix up another 2.21% to the upside, and I got a bunch of lines on this chart, but suffice to say, guys, the bulls are still in absolute full control, dominating this Netflix chart. Bull flag right there, breakout to the highs, looking for the daily higher lows and looking for the expansion. It's not pretty, but sometimes it definitely does work. So the bulls in full control. Blue sky breakout right now. New all-time highs, your next resistance range. Go with psychological numbers 1250 and 1300 at this point. It is still a very beautiful weekly uptrend. Higher lows are now set at around 1100. So any pullbacks, guys, still going to be looking on the weekly timeframes for a higher low. It's extended, too extended for me on all time frames right now, too extended from the 12 on the monthly, too extended from the 12 EMA on the weekly time frame, and on the daily time frame, not so much extended from the 12, but the higher time frames lead me away from this one in terms of the swing trade and even valuation right now, guys. I'll redo it for you all at 1200, but if it's expensive at 1100, suffice to say, it's even more expensive at 1200 too. Now, moving on to NVIDIA. So before I will preface this, before I get into the technicals, guys, it's going to be very tough to, well, we don't try to predict on the channel, right? But any price action levels that I give will all be, out of out of context by tomorrow after the earnings, right? So that being said, expected move on earnings for NVIDIA tomorrow is around 6%. So 6% to the downside in the event that the earnings are not well received, which would be surprising. But in the event they are not, we'd be hitting the lower end of the support range, 125, right? So 135 down to 125 is the whole range that we're kind of looking into. That's the base of support from back there, the top end of resistance from back here as well, and 6% to the upside. Well, that would put us into somewhere close to the all-time high levels, guys, into the mid 140s. One could argue right now that this was a very nice bull flag looking for some completion to the upside, and I would agree, so keep that in mind. But we have earnings tomorrow, and until we know the results of those earnings, it's going to be difficult to predict any formal price action levels for some continuation. I will be playing NVIDIA earnings. How will I be playing them, you ask me? I'll be selling short puts probably down into the 120 area, and I may go for a call debit spread, something small, something light, but just going for a lottery trade expansion into those earnings. Probably my call debit spread strikes will be something like a 140, 145, or maybe a 145, 150, with about 2-3 months of time to allow it the chance to expand there in the event that they get beaten down by earnings and they have to re-expand thereafter. Moving on to Tesla right now. So Tesla, 7% on the day. Now, Tesla has been doing the same pattern twice in a row. So you got to pay attention, right? Here we were noticing, whoops, why did I press delete? Here we were noticing a very beautiful bull flag looking for some possible expansion where they do a nice little push to the upside, right? Beautiful push. Consolidation at the top end of the move, get tight, really tight. Swing trade longs are made when you, well, I mean, they're anywhere, right? But in around the lows would be the stop loss, and you're targeting expansion into the further levels. They just now hit our second level of take profits, 361. They did the exact same thing here overall, guys, right? Which we were noticing last week on the charts as well. Looking pretty good. Another big move into a bull flag, into the expansion. So the next take profit area, if you have some swing trade longs, is pretty much 410 all the way down to 377. Looking pretty good for some expansion on Tesla right now, and the weekly chart does support that as well. You got a beautiful cross of the MACD a few weeks back, and Tesla bulls are just looking to ramp this one up a little bit more with the new weekly higher lows being set around 270. In the event this is a failed breakout and we just collapse for some which reason, guys, right? X, Y, Z, you name it at that point, well, you have a lot of space here. We're just looking for a higher low on the weekly time frames, anything above that 270 for a higher low for some expansion, but looking pretty good. No swing trade longs for me on Tesla right now. It is gone, broken out of the range, and right now you're at an equidistant take profit range, right? Where's the stop loss? Stop loss is 330. Where's the take profit? It's pretty soon, right? This is like a 1-to-1 risk to reward. You know, if I put the trade on this one, I mean, look, what are you going for here, right? It's like a 1-to-1 risk to reward. It's not the best ratio, so no trade for me on Tesla right now, but good stuff for all the bulls in current swing trades right now. On to Palantir. Palantir flat on the day, but Palantir's chart is looking fairly tame in my humble opinion, right? So it was a very nice daily uptrend right there. We know that we're looking for a daily higher low overall for some possible further longs. And now we are basing into the previous all-time highs. 125 down to 120 is going to be that range. Any further expansionary phase for Palantir, if you want to take a swing trade long, not financial advice, but if you are looking for swing trade longs, your stop loss would be down below here, because if you break that, will be an invalidation, right? And a daily downtrend. And at that point, you'd just be looking for further weekly consolidation. At that point, further and above, your take profit should be the all-time highs, and then psychological numbers such as 150. The weekly bulls on Palantir are looking quite strong, all things considered, with the higher lows all the way down here at 105, looking for that expansion. Valuation, well, we already know, guys, valuation is expensive, but at this point, Palantir trades more so on sentiment than it does on valuation, or even so than technicals sometimes. But all in all, the bulls control most of all the major time frames here. Onto SOFI. SOFI up about 2.29%. Very nice bottoming out of SOFI using these prior guys between about 13 and 1250, let's call it. We know that SOFI has been in consolidation mode. It was a daily downtrend. The bulls might just be looking to expand once again. We have now recaptured the 1 hour time frame, so you can assume that possibly the extent of the daily consolidation might just be finished, capturing some of the shorter term EMAs as well. And the next resistance range is $14 up to $16. SOFI looking pretty good, guys. We were always just looking for a weekly higher low, right? Anything at that point above 1050 was just looking for a weekly higher low. I would have liked to see SOFI pull down a bit further, down into the 12 to roughly 1150 range, really come down a little bit more into our support range, but that's fine. I don't really need it to pull back down there. I write short puts under the market, and I can play SOFI just fine overall. Swing trade longs right now, your stop loss would be below 1274, and you'd be targeting the expansion into this range overall. SOFI looking pretty good with a weekly MACD cross. The longer term bulls have never lost control of this chart. It has always been looking for a monthly higher low for possible expansion. Has just been a bit slow for the last roughly 5-6 months here, but that's fine. Valuation of SOFI does support some possible expansion into the future. Lastly, before last rather, Uber down about, or up 1.42%. Not looking terrible here on Uber, but Uber was one as well that did lose the daily uptrend pattern, right? Lost the daily uptrend, lost the higher lows right here. So now the bulls have a lot of work to do, right? Either we V-shape this or we go into the two-step process of recovery. That's the best case scenario, because the worst case scenario is a lower high into lower low, into more daily downtrends, and into more weekly consolidation. The weekly timeframes could definitely use that, because we are slightly extended from the 12 EMAs, and the bulls have a lot of space, guys. Anything above 71.67, looking for a weekly higher low for possible further trend continuation. That's if the bulls choose to give it a bit up and take some profits, or we get some swings to the downside here. I'd be a big fan if Uber pulls down into the lower 80s for some which reason, right? Anything is possible in these markets. I wouldn't mind playing some short puts down here in the lower $80 range. And that is also an area that I would be building some swing trade longs, as right now, when I find things too extended from their weekly 12 EMAs, I'm just not interested, right? There are other charts that are less extended and providing some decent risk to reward profiles as well. Moving into TSM right now, TSM also up about 3% today. This one will also move quite heavily on NVIDIA tomorrow. I think that they will do well in terms of NVIDIA earnings. TSM on their earnings reiterated that demand was very strong. I expect NVIDIA to say the exact same thing, and TSM moving really nicely right now. Beautiful daily uptrend. Higher lows are now set and possibly looking for the expansion. This is a la Tesla, right? Bull flag, which we were commenting on all last week, using this range that we were clipping into the highs of 193 to about 183, using the support range here, right? Using it as a back test, possibly looking for another leg. If we are trying to take swing trade longs on TSM right now, the stop loss is below 188. Why? Well, because if we lose that, that invalidates the breakout overall and might just be synonymous with a bit of weekly consolidation, right? And the take profit range should be these guys right there at around 208. So looking very good for a breakout trade on TSM overall. Nice support below us still. The weekly MACD is crossing. Beautiful chart in my humble opinion. And even right now at 197, I mean, the valuation is not terrible on TSM, guys. It's never really been high on TSM. Still one of my favorite semiconductor names in the entire market right now. And with that, that wraps up everything for our big tech list and all our indexes. Now let's recap some of the biggest gainers and losers of the day, and then we'll do my portfolio real quick. All right, so if we take a look at the options list right here, obviously not every stock in the market is on this list, but just the ones that I watch the most closely here. Pinduoduo coming down 13-14% into some support ranges right here, 99 or 100 rather, down to about $88. Now, I probably won't be playing this one. The reason that it dropped was, of course, because of earnings, big miss, and you probably guessed it, because of Temu, right? We know that Temu right now is pulling back from the US market because of the cancellation of the de minimis rule, in which they were utilizing to import most of their products and pay no duties and no taxes because the value of the packages was under $800. Well, they've been pulling back on advertising in the US right now and also pulling back on their product lines into the US too. So that is why the stock fell. Not a buy from me right now. I prefer other Chinese names, but just felt that we should cover this stock overall. FICO continues to break down below. And as a matter of fact, I actually closed my swing trade longs. You might remember that I had one entry here at about 1950, another entry down here. We were looking to play the bottoming out process of this chart with a final stop loss territory below your lows. If that was to be breached, which it was today, that invalidates the thesis for any longs, as now with the weekly engulfing move, the next big support range is down here to around $1,300, $1,400. Right? So I'm not looking to stick around until we reach those lows. I'll retest, I'll revisit this chart a bit later. As of right now, no swing trades for me on FICO. I still think it's great as a company for a long-term portfolio. So long-term portfolio holders probably need not be concerned. But if we were in any swing trades, guys, we have to notice the invalidation points and that breach of a multi-month since August, pretty much the last big relevant support level and not much below. Well, that is when we have to kind of get out of those trades. So no swing trades longs for me. BYD was another name that dropped a lot after there was some news that they had to delay their plant construction in Brazil because of some worker disputes and some things like that. All things being said, we're just looking for a classic breakout retest, right? Nice daily uptrend coming into the range highs. 53 down to 49 is your support area. You see this best on the weekly time frame to where the bulls are in complete control, just looking for a breakout, retest, and possibly run. I do own this one in my long-term portfolio. Unfortunately, there's no options on this one, so kind of have to hold back. Those are the biggest ones to the downside. The biggest ones that we did not cover to the upside today. Soundhound, excuse me. Soundhound not looking too bad, all things considered. We found a bottoming out of support down here, 930 down to about $8, let's call it, were those lows, right? It's a bit late to be chasing it right now, in my opinion. Why? Well, because any swing trades, right? The stop loss would be below here, and the take profit range is roughly $13 up to $14, right? So Soundhound, not one for me in terms of a long-term position. If I'm looking for voice AI, my preferred play is probably Twilio. I just think personally they have a better product overall than Soundhound, but special shout out to Soundhound. No swing trades, no longer term position for me. Just felt that I needed to cover it since it was a big mover today. SOXL, of course, Ethereum, of course. Elf Beauty has earnings tomorrow as well, right? And beautiful pre-earnings rally. I was kind of screaming at myself, because I can't tell you guys because that would be financial advice, but let's just say I was screaming at myself for the last 3 months that Elf Beauty was a fantastic buy in those lower areas. So if you guys also chose to participate, congratulations, you're probably sitting on some very decent gains right now. Most of all the shares that I picked up for my long-term portfolio are all up 30-40+% in that same time period. That being said, coming into resistance 105 down to 86, we will see what they deliver for earnings. I think earnings for Elf Beauty should be quite good. The company is still fairly valued. Even here, I know at 90 you're not getting the lows, but they're pretty good. I'll redo the valuation and everything like that for you guys tomorrow after earnings, but moving well indeed. Tomorrow for earnings, I'll probably be playing a call debit spread for some upside, very small trade, but I will be playing a lottery trade for earnings and maybe writing some short puts under the market for as low as I can possibly find them. And lastly, special shout out to Decker's Outdoor Brands. Now, I'll show you guys some trades that we made on Decker's Outdoor Brands. A few of our members here on the Friday session, when I covered earnings for them, earnings were very good, guys. Domestic and international showed some very good expansion. The reason that they fell about 20% after earnings was because they said that they were going to have about a $150 million hit because of tariffs, but it was a top end of a range. That's what management said. They said it could be up to $150 million, but then they're going to look for with suppliers to see, can some suppliers absorb some of those costs, or will it be $150 million Overall, that was just their best guesstimate to the upside. So management providing some guidance. The market did not like that. But what it did provide is a fantastic entry opportunity for a great company overall. This company has really good fundamentals, very good margins. Most of their brands are expanding up and to the right. And if we take a look, they have no debt overall. And additionally, guys, if you take a look at their expansion right here, in terms of revenue and EPS, it's never been a problem for them. Really smooth chart of EPS expansion for the next few years, a really smooth chart of revenue expansion as well. Probably one of my favorite apparel plays in the market right now. And even though you're not getting the lows right now, I still do think there's a lot of meat to be had on this trade. A lot of my Discord members took some leap call debit spreads at the lows, are up phenomenally right now. And we also played some short puts under the market, which provided us some very good opportunities into those support lows. So shout out to Decker's Outdoor Brands. I really do like this one for possible swing trade longs to the upside, really coming into almost weekly oversold conditions. And you can see, right, the MACD was curling over before earnings, and I would expect that momentum to possibly continue into the future. I think the valuation right now at only a 3 forward price to sales is quite manageable in the apparel space, and that is mostly all the things that we're going to look at here for the biggest movers and losers of the day. Obviously, I can't cover 15, 20 of them, but I cover a lot more stocks when I go over some of my swing trades, and even the top 5 options video from yesterday. I show you a lot of the stocks, a lot of the trades that I'm looking for, and in each one of these weekly videos, guys, you'll always probably find some ideas in terms of either swing trades or maybe stocks that you weren't paying closely attention to that might be put on your radar right now. Speaking of my portfolio, let's dive into some trades, shall we? Okay, so in terms of the very brief recap from the trades from last week, here's what you have. We had a bunch of wins on the wheel. We had 2 assignments on Apple and SOXL. I didn't see you guys on Friday. Just wanted you guys to know that we got assigned on Apple shares. We had the 197.5 short puts into Friday, which we got assigned. And we also had the SOXL short puts, $16 puts, very close to the market, a bit aggressive, which we also got assigned. We rolled some SOFI calls overall, and we had some lottery trades that did play out. Those are just some earnings plays. Overall, a decent week, bit of a light week. We did play the markets into consolidation. We built further positions as well in terms of swing trade longs, and that was the recap for last week overall. Now, if we're looking to some of the trades that I made today, and since I've seen you guys, well, talking about some trades that you won't see before we take a look at the trades that you will see, Decker's Outdoor Brands. We had a few trades last Friday that I took. This one was closed intraday, 89 short puts. We got them for 35 cents, closed them for 5 cents intraday. That was a very nice one. I also did another contract for this week, the 85 puts for 32 cents, which was almost 0.5%. And suffice to say that we closed that one as well today, looking very good. 0.05 on the close, looking very good there. We also had a nice HIMS trade that we closed. You remember HIMS last week had like a 7, 8, 10% down day. At that point, we wrote the 36 puts for 14 cents, closed those as well for 3 cents. So another win there too. And Amazon today, guys, Amazon, we had this trade, 63 cents for the 195 strike. It was between the bull and the bear market strategy. It was the expected move. It was a 15 delta, the expected move, decent ROI into the support level, and was on my top 5 options list video yesterday. Suffice to say, we closed that one today, intraday, for 70% profit. I told everyone, feel free to hold longer through the week and for more profit. I'm happy with 70% intraday. So some people are still holding. I personally took profit, freeing up some capital for any new trades that we may have on the horizon into the coming few days. That's everything for the current trades that you may not have seen. If you want to take a look, the FICO trade that I took a loss on, because I'm always transparent, here is the loss. You can see I bought $700 of shares at $19.50, $300 a DCA at $17.73, and we closed everything today for a total of $819. So got in for $1,000, lost about 181, 18% with today's 9-10% down day. Moved very fast, kind of like UNH did to the downside. The level was breached. We kept the trade very small, very manageable. We get a lot of wins, but sometimes we do have some losses trying to play fantastic companies. As you saw, my thesis was that we broke support to the downside. So that was one of the only, or one of the recent swing trade losses that we had recently. So that being said, that was everything for the trade updates that you guys won't see in my account. Now for the ones that you will see in the account, let's recap those right now. So I'll show them to you. I used to show you guys the web version of Interactive Brokers, but I'll show you on TWS because it does a better job of kind of grouping the different trade styles together. So let's take a look at some of the trades that I still have open. You can see that the apples that we got assigned last week and the SOXLs are right there with their updated average costs encompassing how much I received for the short put premiums. Now, as you'll also see, we wrote some covered calls on Apple today, same strike as we got assigned, and we got $3.60 for them. Fantastic premium in my opinion for Apple. SOXLs, same thing. We got a very nice premium at the open here, $1.10 on those covered calls. That gives us some really good cost basis right now on Apple and SOXL. Apple cost basis is now $193.39. We'll see if we get called away this week. And SOXL, $14.70 as our cost basis there. So everything considered, guys, looking pretty good. Can't complain. Got some fantastic levels overall to start off the week. That is some of the assigned positions. Other than that, everything else is kind of the same, right? A few new trades that we took today. You'll see this Rocket Mortgage $12 put that was also on the top 5 options list yesterday. We got them for 7 cents, which was 0.5%. They're currently moving in our direction. We still have all the other call options that I've been telling you guys about for weeks and weeks and weeks right now. The Affirm asymmetric bet, which is still on board. We also still have the Rocket Mortgage calls for May of 2026. Those are still on board as well. These SOFIs is just a covered position, right? We've been wheeling this one for a long time right now. Matter of fact, let me show you the average cost basis on SOFI that we've been running now for a while. We got assigned back in January at $16. We're still in this one, getting a very nice amount of ROI per week. Our cost base is now $11.26 after one DCA and a bunch of covered calls. We are now very nicely sitting in profit. So very happy with the way that that trade's been going for us so far. TLT calls are still on deck, being very patient, did not add another one. And in terms of the debit spreads, these are debit spread longs. You can see the total market value, right? I do have a lot of swing trade longs in motion right now. Most of that is the Amazon and the Micron Leap bull call debit spreads, which I've showed you guys many times on the channel. Some new additions to these were the Berkshires from today, $1.63. Talked about it earlier in the video, looking for a swing trade long. And I also opened up a trade desk 80 versus an 85 bull call debit spread for July. That one I did not go over, but overall, it is another trend continuation trade for the trade desk overall. Just looking for another leg of weekly expansion, possibly into some of the resistance highs, which come into play in the higher $80 range. Kind of a bull flag at the top end of the move right here, bouncing out of the 12 EMA. Give me the breakout. The stop loss right now is below this level for that trade, and we're going for possible expansion into here. So that is one of the other swing trades that I did not show you guys. Other than that, you guys have seen all the other ones. The A-Labs, I'm sorry you guys can't see the running value of those contracts, right? But the P&L here should give you a fairly good idea of where we stand. A few trades are still lagging behind, such as the Pepsis, the UPSs, and such as the MSTRs as well, which is kind of just lagging behind Bitcoin right now with the lawsuit news, but everything else is moving well. UNH, this one has been dead for a while. You guys might remember I started this position when UNH started dropping, never cut it overall, was giving it the benefit of the doubt, but now we're down. Overall though, you know, sometimes you take these losses, but we were on a lot more wins than losses. Losses are part of the game, guys, and it's your ability as a trader to, surmount the losses, right? Overall, this one arguably should have also traded with a stop loss. I did not for a very rare occasion in which I didn't do it. UNH had a historical drop. So as a result, I lost some money on UNH. These will probably be dead. They're for August. No recapture value on them right now. They're pretty much dead in the water. But that is everything for your swing trades. Feel free to take a screenshot. I go through these. I've been through these a lot of times overall, guys. So not many of these positions should be new. I just kind of recap the newer ones for you. But you can see we got a bunch of swing trade longs underway right now. And I prefer the call debit spreads. And we even have an Affirm and a Rocket call up here as well. Most of my capital, though, you see there's about 10 grand plus these calls up here. Maybe let's call it 12 grand of swing trade longs in the portfolio right now. But overall, I keep a bulk of my capital for the wheel strategy. Always have and always will. So manage your trade sizes accordingly. And with that, wraps up everything I had for you guys today. So hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We'd love to have you back. We do these every Monday to Friday after the close. And lastly, if you have any questions, feel free to reach out down below in the comment section. Always love helping you guys out down there. And in the event that you guys wanted to join our trading group, where we don't only trade, but we also build long-term wealth, long-term portfolios, guys. All of us have two portfolios. I'm very adamant on that. A long-term portfolio and a trading portfolio in which I take all the swing trades styles that you guys see all the time, right? Whether it's the wheel trades for short puts, whether it's directional trades with call options, call debit spreads, swing trades with shares, etc. If you guys want access to all of my trades from all of the strategies in real time, feel free to click the link down below in the video description. It gives you access to the Discord overall, not only access to my trades, but also the private morning live streams for about 2-3 hours after the open every day, where I trade live and take all your questions on stocks, options, and your long-term portfolios. If you're not there, they're recorded. And also, you feel free to reach out to me in all of our chat rooms throughout the day. I'm very fast to answer for any of your questions on trades, portfolios, and anything in between overall. You also have access to my private videos where I go through all of the strategies for building small or medium or large accounts, what percentage of the account should be in which style of trade to maximize your ROI while minimizing the risk as well, technical analysis videos, fundamental analysis videos, and many other things in between, trading strategies, some of which I don't go over on YouTube. All those are accessible to our members, and you also get access to all my watch lists and all my technical analysis. You just copy paste. It's copy paste, takes 2 seconds, 2 clicks of a mouse. You get all my watch lists, all my chart setups with the technical analysis plotted on the charts. And anytime I do fundamentals like this on over, at this point, hundreds of stocks, that all comes included as well as an added benefit. So if any of that sounds good to you, as I said, the link is down below in the video description. Hopefully I see you guys in there soon. And if not, well, I guess I'll see you right back here on the channel, guys. That's it for me. Take care. Pleasure as always. See you in the next one, and peace.